Good morning, I'm Emily Beckett, Digital Marketing Specialist at Sprague.
And I'm Steve Wolf, Wholesale Marketing Associate at Sprague.
Welcome to Sprague's Refined Products Review, where we share what's moving the market, giving you insight into what we're seeing every day. All right, so let's jump into this week's review. First off, what happened with prices?
Certainly an interesting week in the market price-wise. Brent crude slid about $2 and settled just over $62 per barrel. Prices fell as investors pulled back from risk assets overall, especially in sectors tied to AI, and concerns around the U.S. proposed Russia-Ukraine peace deal, which would remove one of the last bullish factors in the market. NYMEX diesel spot prices remain super volatile, as we saw a 15-cent jump on Tuesday, and by Friday, those gains had been erased.
And what's going on with crack spreads?
Good question. A crack spread is the difference between the price of crude oil and the products made from it, like gasoline, diesel, and other products. According to recent reporting, the U.S. 3-to-1 crack spread, a benchmark indicator of refining margins, hovered around $32.13 per barrel by November 18th, which is close to its highs and the highest since early 2024. So in summary, crack spreads were very strong last week, especially driven by the diesel side and overall refining profitability. The general refining margin trajectory remains tight and elevated, and it is important to note that since the high water mark on 11/18, we have seen the cracks come down considerably, but it is still very high.
And how about inventories? Anything notable there?
U.S. petroleum stocks still are relatively low, despite growing concerns about a surplus supply. We are still waiting to see the oil glut come to fruition, as peak oil demand has been in the headlines lately.
Why did the International Energy Agency revise its previous global oil outlook?
The IEA reversed its earlier forecast of a 2030 global oil demand peak because many countries have backtracked on their climate commitments, and oil and gas companies have slowed or reversed their efforts to diversify into renewable energy. In its November World Energy Outlook, the agency now projects that growth is expected to be driven by industrial needs, residential power use, and especially the technology sector, where the rapid expansion of energy-intensive data centers for the AI boom continue to increase consumption.
And is there anything major to watch in terms of geopolitics?
Absolutely. The proposed U.S.-Russia-Ukraine peace deal could remove one of the final bullish anchors in the market. A stronger U.S. dollar fueled expectations that sanctioned Russian supply could return to the market, adding to bearish pressure already driven by the rising OPEC Plus output and demand concerns.
Well, thanks for joining me, Steve.
Thanks for having me.
For the first time on RP Review, we're doing a giveaway, so be the first person to comment the correct answer down below, and we've got some Sprague swag with your name on it. So here's your question.
This answer was mentioned previously in this video. Around November 18th, the U.S. 3-to-1 crack spread was hovering around what price point?
We want to wish everyone a happy Thanksgiving and just share how thankful we are for all of our viewers, customers, and partners here at Sprague.
That's all for today. Thanks for joining us, and we'll be back next Wednesday with another Refined Products Review. Refine your insight.
Feel your success. There you go. What the was that? All right. Oh my God.
With another Refined Products Review. Feel your...
It's a minute.